Hello, and you're welcome to Global Business Insights, where from a global perspective, we discuss ideas and answers to questions in the finance and business world. US wholesale inflation or producer price index rose 1.8% on a yearly basis in September. This reading followed the 1.9% increase recorded in August, coming in above the market expectation of 1.6%. The producer price index was flat month on month. JPMorgan Chase has posted third quarter results that beat estimates for both profit and revenue, as it saw more interest income than expected. Earnings at $4.37 a share beat $4.01 expected, and revenue at $43.32 billion, also better than $41.63 billion estimated. Net interest income rose 3% to $23.5 billion, exceeding the $22.7 billion forecasted, mainly on gains from investments in securities and loan growth in its credit card business. Investment banking fees also climbed 31% to $2.27 billion in the quarter, exceeding the $2.02 billion that had been estimated. JPMorgan Chase CEO Jamie Dimon said in his statement that while inflation is slowing and the US economy remains resilient, several critical issues remain, including large fiscal deficits and infrastructure funding needs. JP Morgan was up 4.38%. That was an hour after the markets opened. Wells Fargo reported lower earnings and revenue in the third quarter than a year ago, amid an 11% decline in net interest income. Revenue at $20.37 missed $20.42 billion expected, but earnings per share beat expectations. The bank said the decline was due to factors such as higher funding costs. Wells Fargo was up over 6% shortly after the market opened. Still on banks, TD Bank will pay $3 billion as part of a settlement with U.S. regulators over improper monitoring of drug cartels, money laundering. Attorney General Merrick Garland said that over a 6-year period, TD Bank admittedly failed to monitor $18.3 trillion in customer activity, thus enabling money laundering networks. We will look at what we are learning from third quarter results next week as more banks report their results. CEO Elon Musk yesterday unveiled the company's autonomous robotaxi vehicle during an event at Warner Brothers Studios in Los Angeles. The cyber cab has no wheels or pedals and costs under $30,000 and will be rolled out before 2027, depending on when it gets regulatory approval. Analysts said the unveiling failed to highlight the near-term opportunities for Tesla, instead prioritizing Musk's fully autonomous driving future. Tesla shares sank over 6% in pre-markets and at open sank over 7%, implying investors wanted more on short-term financial impact. AMD has launched a new artificial intelligence chip, taking direct aim at NVIDIA's dominance with data center graphics processors, the Instinct MI325X, as the chip is called, will start production before the end of 2024. AMD shares opened flat, slightly in positive, suggesting markets were mostly unimpressed. In France, Prime Minister Michel Barnier has proposed a budget for next year with some 60 billion euros in spending cuts and tax increases on companies and the wealthy as it seeks to narrow its widening deficit. In the proposed budget, some 440 large corporations with revenues above 1 billion euros would be hit by an exceptional tax lasting 2 years, with the aim of raising a total of 12 billion euros. Share buybacks would also be taxed. Nigeria spent a staggering $10 billion annually on petrol and generator maintenance, according to a new report by Sustainable Energy for All. This exorbitant expenditure underscores the country's heavy reliance on fossil fuels for energy generation, despite significant challenges, and places a burden on households and businesses, hindering economic growth and development. Still in Nigeria, the Nigerian National Petroleum Company Limited yesterday increased the official pump price of petrol in its retail outlets to 1,030 naira per litre in Abuja from the 897 naira it announced on September 3, and from 855 naira to 998 naira in Lagos. The move effectively puts an end to Nigeria's multi-decade wasteful petrol subsidy regime. Senior business analyst Lekan Sote comments on the move. First, we take comments by Lekan Sote on the recent announcement that subsidy on petrol in Nigeria has been fully eliminated.
All things being equal, subsidy is indeed gone in Nigeria. Heineken Lokobiri, Nigeria's Minister of State for Petroleum Resources in charge of oil, has declared the oil and gas sector is fully deregulated. We encourage companies, including Nigeria National Petroleum Company Limited, to operate independently, following global practices. And the players in the oil sector seem to have accepted their fate. Tunji Oyebanji, chairman of Major Energies Marketers Association of Nigeria, the cartel of the downstream petroleum sector, says, "I believe the price of petroleum has finally been deregulated as subsidy has finally been eliminated. Henceforth, the price of petrol will be determined by market dynamics. Government can no longer bear the burden of subsidy." The exit of the original fuel subsidy, introduced by the government of General Yakubu Gowon in the 1970s to equalize the price of petrol across all regional markets, is confirmed by the different resale prices recommended by NNPCL for the different regional markets. And the steep movement of the price of petrol by about 430% between June 2023 and October 2024 is evidence that subsidy or under recovery of costs has been replaced by full recovery of costs with allowance for profit margin for the sellers. The removal of the subsidies was achieved by two strategic moves. The first is by Alhaji Aliko Dangote, who set up a private refinery in Nigeria. The strategic impact of this venture is that Nigeria no longer has to source for forex to pay for imported petroleum products. That reduces the pressure on the naira, which will even become stronger. The second strategic move is the federal government's decision to receive naira for crude petroleum that is sold to Dangote and other local refineries. As the local refineries no longer require forex to buy the crude, the demand for forex reduces, and the naira should be much stronger still. Hopefully, when more local refineries spring up and the supply of petrol increases, the invisible hand of the marketplace should appreciably adjust the price of petrol downward, while recognizing the fluctuating price of crude petroleum in the world market. But there are a few booby traps in the way of the expected state of bliss. Nigeria's joint venture capital partners, known as international oil companies, and Nigeria's creditors like Afrexim Bank that have advanced loans to Nigeria have a priority to offtake their allocation of crude petroleum produced by Nigeria. That may effectively reduce allocation to Dangote and other local refineries. But this limitation can be overcome in two ways. Nigeria must negotiate or renegotiate a higher crude petroleum production level with OPEC+. Also, Nigeria's security agencies must be motivated to stop or significantly reduce oil bunkering. It is probably going to be easier to achieve the former than the latter, but time will tell. By the way, those who quote Section 205A of the Petroleum Industry Act to argue that government cannot fix the price of petrol must also pay attention to Section 205B that says where government thinks the commodity is in the hands of a monopoly or even a cartel, government may step in to, quote, regulate the tariffs and prices, unquote, charged by the supplier. But bearing in mind Section 207 that allows reasonable returns on investment to the traders. It should all work out well if Nigeria's bureaucrats who profit from the old ways do not throw any spanners in the works.
The inflation rate in Germany, that's CPI, compared to the same month last year was 1.6% in September 2024. In August 2024, the rate change had already fallen below 2% at 1.9% after 2.3% in July 2024. According to the report just out, the last time the inflation rate was lower than in September 2024 was over 3 years ago in February 2021 when it was 1.5%. Ruth Brand, president of the Federal Statistical Office, said the renewed price declines for energy dampened the inflation rate in September more than in the previous months. In contrast, the continued above-average price increases for services had an inflationary effect. In the UK, there was a bounce back in construction, and a strong month for accountancy, manufacturers and retail businesses helped to boost the economy by 0.2% after it failed to grow in the previous 2 months. But the Office of National Statistics still says economic growth is weaker compared to the first half of the year. Wall Street started to get another glimpse into the outlook coming from the biggest US banks as the Federal Reserve starts dialing back interest rates, and uncertainty continues to shadow the economy. JPMorgan Chase & Co. and Wells Fargo & Co. so far showed a mixed picture as the quarterly earnings report cycle kicked off today. JPMorgan Chase reported better than expected third quarter profits of $12.9 billion, even as the bank prepared for higher loan losses from more indebted borrowers. Wells Fargo underperformed on revenue and margins as funding costs weighed on profits, but earnings topped Wall Street expectations. Next week, we get Citigroup, Morgan Stanley, Goldman Sachs, and Bank of America reporting. Market optimism will be tested by the reports as we saw US bank stocks higher, almost 10% in Q3. The question will be if too much positive news on the economy was priced into expectations, as executives are expected to be cautious on the outlook. How will Fed rates coming down from a 2-decade high affect consumer appetite to borrow? How will it affect net interest income, loan and deposit growth, and credit quality? The drop in interest rates isn't entirely negative to banks, since it can also fuel demand for bond sales, consumer borrowing, trading, and other activity that fuels profits. Analysts also say investment banking fees may be one bright spot as more M&A activity is driven by cheaper financing costs. So far, the theme playing could be a tentative recovery in consumer spending and loan growth as the US avoids a recession amid a cautious narrative on the economy. European markets were mostly slightly higher as investors assessed the UK gross domestic product figures and look ahead to highly anticipated fiscal stimulus from China. China's Ministry of Finance is expected to hold a news conference on Saturdays, with investors widely expecting unveiling of fresh stimulus measures. In the US, the news that lower rates did not bite into bank earnings as much as feared may have helped sentiment. Stocks gained as the major banks' earnings announcements kicked off. Well, that's it from me on Global Business Insights. This is Bodio Shosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Again, thank you so very much for watching. Bye-bye.